The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 4th. Fantastic Friday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be, and I do mean always, pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But more importantly, I'm here to serve you. So feel free to call on in right now, 877-927-6648. Internationally, 727-445-1044. Of course, you can send me an email, steve@tfnn.com. And, of course, all of the wonderful instant messages inside the Tiger's Den. That is as Tom likes to say, a beautiful thing. So let's go ahead and get this show started on Fabulous Friday. Of course, this is the Hotel California, sponsored by Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trade up about 50 points at 17,980. S&P trade out at 2098. That's up about 10 points. NASDAQ Composite up 27. Russell 2000 is leading the charge to the upside. Now, that is good news for the bulls. That's up 17 points. Whenever the Russell 2000 leads on the way up or on the way down, it is giving us more than just a hint of what is to come. The DAX closed down 66 points. The FTSE down 97. Gold's trading up $1. Silver down 2 pennies. Lightspeed crude off about 67 cents, trade down to 43.93. Leading the charge here to the upside dollar-wise, you've got Mettler Toledo International up $25, 6%. Mohawk Industries up 8% or $13. Credit Corp up 6.5%. We'll call it nearly $10 to the upside. Google's up 6. The jazzy one, Jazz Pharmaceuticals, up $7 as well. To the downside, Universal Electric, maybe? I don't know. Elect something. Down $10, off 14.5%. Willis Towers Watson, down 6.5% or $8. Cornerstone On Demand, down $7.50. Floor Corporation, down $7. Shutterstock, down $5. Amazon off $5. So plenty to talk about. But where do we begin? Where do we begin? Okay, well, first of all of you that are listening in, all of you that are watching in, each of you are masters of probability. That's just like my newsletter service. You are each masters of probability. There's not a single one of you out there that has listened to this show for years now, maybe weeks, maybe months, however long a period of time. If you've just been listening for the last week, and then probably you haven't heard it. But for those of you that have been listening for longer than that, you knew what to expect, what to anticipate today, because you are a master of probability. You knew that no matter what the market was doing as it was careening to the downside yesterday, that at yesterday's close, when we saw that VIX index close, I think it was up about 14%, you knew what was to follow. Did you not? No, you did. And so today is nothing more than something you would anticipate. Why? Because when we see that phenomena, it's an exhaustion, and it tells us that the market is either going to bounce or bottom out here the very next trading session. Look, it used to be within 48 hours. That's if you go back historically and you take a look at that phenomena, as each of you have done. When I say historically, I'm talking the last quarter of a century out there. So we know that the data is solid with regard to Stevie's and now your 10% rule out there. So what we're seeing unfold here is nothing more than normal. Now what you and I have to do is to identify or determine, okay, what's next? And now today's close will be important. So let's start with today's close and the important elements. The important elements, we'll go take a look at the ES Mini as an example. The ES Mini, here's what we know about it. It has completed, and as we speak at 1:11 in the afternoon, it has given us an actual buy signal, a Gartley buy signal. And we talked about this yesterday. You know, H.M. Gartley, he's sitting there upstairs, right? He's sitting there upstairs. He's licking his chops. He's saying, really, could it be this easy? How did these guys put it all together? Because we've actually taken his work and we've just simply improved upon it. Yeah, today, I promise you, you're not using the same light bulb that you did or that your grandparents did out there. You know, we're using new and improved stuff. So in the case of the ES Mini, as we speak right now, we've got a nice bullish reversal signal at the completion of a 1-to-1 equals A to B equals CD. That's after making this move out here. Could this possibly, how could this be? And I know you're saying, what the heck is he talking about? Well, hey, this is a Gartley buy pattern after, voila, Brexit. Ring a bell to you? Brexit? You know, when the market went ahead and moved lower and then just simply was ba-boom or va-voom or something boom to the upside. Now, what do you think the chances are that we're going to see the same thing after the U.S. election cycle? Now, I can't tell you whether it begins today. I want to tell you, what it is. I'll tell you what to look for. It could begin today. Maybe tepid for the next couple of days. Maybe there's one more big push to the downside out here. But as we speak right now, you and I have to take a look at the smoke signals that are given to us as of 1:12 in the afternoon. And what is going to happen? Yes, these markets are going to make it back to their highs. They're going to go ahead and take out their highs. We may see a huge, and I do mean huge, A to B equals CD to the upside. But we have to take things one step at a time because you know that I am willing to change on a dime. We've got to figure out where that change on a dime comes from. Probably I'm the only one that says that there, but we need to understand where that actually comes from. Nonetheless, you do have a perfect, and I do mean perfect, Gartley buy as we speak right now. Today's close will be important. This candle can vanish. It can go away. We can see the sellers and the bears come and rush in and just put the kibosh. Where's that word come from? Well, we can see they put the kibosh on this. As we speak right now, that is not what we have. What does that mean? That then says the next most important level inside the ES Mini is going to be 2108. That is our oscillator unchanged line. If price just gets up there, rejects that level, and you're at 2093, can we get up there by the end of the day? Yeah, the sphincter muscle could actually get pretty darn tight. PDT, as we like to say in code as a technical trader, it could certainly see that unfold out here. Does it have to happen today? No. Can it happen Sunday night, Monday? Yeah. And if price does get above it, that's going to just give you a double-ghee combination of this Gartley buy pattern. So that's what we're looking at inside of the ES Mini. If we go take a look at Mr. and Mrs. Weakness, because I'm not sure whether to call it a he or a she out here, and that would be the Russell 2000. We've got the same thing in play out here. Now, in the case of the Russell 2000, the A to B equals CD looks like this. We would start right out here at this swing point. I don't have the date out here. I'd give it to you if I had it handy, but I don't have my crosshair up here. But I'll give it to you for those that are listening. Your A point is September 25th. Your B point is October 17th. Your C point is October 25th at 1 to 1.272. A to B equals CD. You've got a confirmation, a Gartley buy combination inside the IWM or the Russell 2000 futures contract as we speak right now. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we've established that as we speak right now, about 1:20 in the afternoon, we've got two nice Gartley buy patterns, one inside the Russell 2000, one inside the S&P 500. There's none to be had inside the NQ, really, because it's not in that type of a pattern style out there. So let's take a look at the next element. We looked at Stevie's red line, that oscillator unchanged line. That was at the 2103 area, and that could or should be some good resistance inside of the market. Now, there's going to be some intraday resistance that we'll want to watch to see how to help guide us as to how the market here plays out the rest of the day. These are intraday charts. Everything is green, or almost everything is green out here. So as John Logan likes to say, green shoots. So we got green shoots on the 10 to 30. Well, not the 10, sort of the 10, 30, 60, 120. We'll flip over to some other time frames out here, and we'll go take a look at the 240, the 300. This is for the ES Mini, by the way, the daily and the weekly. So in the case of the 240 and the 300 minutes, you can see that little point of control area about 2095 to 2097. This should be a fairly good resistance zone. If those get taken out, then it's at 2102 on the 240 chart out here. That should be resistance. Now, if we take a look at that little top of its box and that point of control, we can see that it's slightly closer to the top of the box, the 2102 level, and therefore that says that it really should be sellers in this box range that have the upper hand, so to speak. You can see even on the 5-hour chart, it's 2106. So that range to the upside on any move above 2098, we'll call it today. You should look for that 2102 to 2106, which is Stevie's 2103 level, to really be some stiff resistance. What happens if it doesn't get up there? Not much, really. Not unless, the market completely sells off. We end up in the red or something along those lines. So the answer would be not much. Those are the levels that you want to be paying attention to. Now, this helps both bulls and bears. It doesn't matter to me which side of the trade you're on, just as long as you use proper money management. Then, then that's perfect. And as long as you haven't over-leveraged yourself, so you're using the proper risk out here. So that is where the next battle is going to occur, or should occur, inside of the ES Mini. Now, with regard to getting the ultimate of signals out here today, and I don't know that we're going to get them today. I'm not anticipating that we're going to get them today, but if we did get them today, well, I would know what to do with it, just as you will know what to do with it, just as you knew what to do with it when we took a look at that one-day rate of change of greater than 10%. I know there's some people out there that aren't believers, But by goodness, folks, how many times do you and I call this, and we have to be believers because it works. I can't say it. I would bite my tongue to say it. I'm not going to say it. It happens most of the time. I can say that, right? A majority of the time. People might say, is that a majority like 6-4? No. Is that like 7-3? No. Is that like 8-2? No, it's actually better odds than that of it occurring out here. That is a beautiful thing. So if we take a look at that next element that you and I must and will take a look at, that we will know what the market is going to do. And oh my goodness, the insurance industry is loving writing all these puts and calls, watching all these folks try to protect their portfolios out here. The next level that you and I want to pay attention to, well, it's not on that chart. It's on this chart right here. We want to pay attention to the level of, right now it's 1977. Now, look, this is going to change by a tear or two as price moves up and down. Might have been 1989 or so earlier this morning when I posted it. I can't remember the exact number. But we're going to pay attention to Stevie's green line out here. If we see the VIX, or when we see the VIX index move below that, then what you can anticipate is the VIX moving down to 1710, 1522. Remember, those numbers are going to change. But what it basically will be saying is that is when we will see this market really move and groove and rip your face off rally kind of unfold. We are not there just yet. That means that today's move is somewhat suspect, which would make sense, right? Today's move, we could anticipate just simply because that one-day rate of change. Okay, so that is playing itself out. That doesn't necessarily say that you have to form the bottom out here. What would give us that signal is the VIX index closing below 1978. We're not there. I don't anticipate it. If it doesn't, what does it mean? It means just that. It means we don't have a double E, maybe I said double E before, so some type of triple confirming signal out here. That would be the ultimate of signals. We are not there just yet. Are we going to get there? And the answer is unequivocally, with certainty, yes, we are. I don't know when that is going to be. And I'm not throwing out there like as a WAG, a wild, guess out there. This was certainty. We are going to see the VIX, as you and I talked about, get back in line. There is no more important chart than something that is not a chart. I pointed this out to you yesterday. I've pointed out to you again today. There is no better piece of information or group of pieces of information out here than this. We know that the cash spot index right now for the VIX is trading at 2122 out here. Does it really matter where it's trading at? No, but it matters where it's trading at in comparison to every futures contract that is out there. Whether that is December, January, February, March, April, May, June, July, because it is trading above all of them. And folks, if there is not an anomaly that exists that tells you that something is out of whack here, this is it. It's telling us that it's out of whack. And so we will see things get back into whack. It may not be till Tuesday night, Wednesday morning. I don't know exactly. Could be Monday. Who knows what's going to happen over the weekend? We already know that we're off to a signal right now inside the markets that say, okay, I've given you your Gartley buy pattern. Now you like to see follow through the very next trading session, so that would be the Sunday, Monday trading session out here. And the question Duffy asks is, how about November 14th? Many of you know that I've been forecasting November 14th as a date when the market would form a bottom, and that is a timing signal, Duffy, and it's a great question. And somebody's going to say, well, where does that come from? I wonder if I have those turned on here because my system had shut down. Oh, I don't have it there. Oh, I know where I can get it from, though. Give me a moment here. I think I can get it from here. It's kind of an old file, but let me see if I can, because I will do anything, and I do mean anything for all of you out there. That's just the way that it is. Retain office. I don't know if this is the right one. Let me see if this is it. Here we go. So oh, that didn't work. Let me put this out here. So here's one of the charts that we've been taking a look at, right? And this chart here really showed a couple of different bottoming dates. One chart here, this is the presidential election cycle with regard to, we already know that there is a Democratic president in place. So all we have to do is really go back to 1932 and take a look at all the times when the market went from, or not the market, but the presidency went from one Democrat to the next. And we can also take a look at what happens when it changes party, goes from one Democrat to to a Republican. And this shows, in the case of if the Democratic candidate is going to win, that the market would go ahead and form a bottom November 14th. And voila, it says if the Republican candidate was going to win the office, the market would form a bottom on October 21st out there. Well, we know that the market didn't form a bottom on October 21st, or the 13th through the 21st, really, as we speak. What I will say is we haven't really seen the types of moves established with either of these out here, Duffy, that gives me or gives you or should give anyone a great deal of confidence with regard to who it is that's going to win the election. And even with that in play, I say follow the pattern. This is an analog, which we use as Jack Sparrow or Captain Barbossa used to say as a guideline. What rules our world are the patterns. A to B equals CD is one of them, and it's giving us a bullish reversal signal. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Check the email out here. See what we've got. We've got email here from Bill. Where support on GDX for the pullback. Thanks. So, Bill, let's go answer that question. Thanks for writing in. It's pulled back right now down 41 pennies on 29 million shares or so. Let's take a look at it. Looks like we just have a little bit of a sideways move going on out here after that little high volume push that took place on November the 2nd. So where is support? Well, what we can can say here, let me just make sure and update this chart here, is it looks like we have a brand new market profile that has formed out here. And that says that you've got a new little resistance area, that zone being about 25.68, Bill, and support would be 23.68 if it continues to pull back. Now, if it could close below 24.68, then the 23.68 becomes a number. I don't know whether it's going to do that or not out here. Yesterday's volume was about 67 million shares. That was trying to get back over that swing point, which it did from October 19th. That had 88 million shares out here. There's additional resistance to the upside, 26.22, 27.46 out here. But that would be the level of support with regard to take a look at the GDX on a daily basis. But let's face it, this thing is off to a very nice start. Off of its own version of a Gartley buy pattern, and now we've got some nice higher highs and higher lows out here. And as long as the swing point from October 28th is not taken out, that's a low of 23.43. All looks good to the upside. So thanks for writing in, Bill, and have a nice weekend. I don't see any other questions out here. I don't think there's anything left inside the Tiger's Den to ask for out here. So our question that needs to be answered. So the question becomes, so where do we go? Do we go take a look at the usual suspects? That's kind of boring. Probably all of the other commentators. Well, Danny asked to look at oil, so we have to do that. Now, I'm happy to look at all the suspects if you type them in, but I haven't really had a chance to listen to shows. I don't want to just regurgitate. Nobody wants to do that anyways, but I don't really want to just give information that's been provided by others out here. What fun is that? If we do take a look at light sweet crude, let's look at it on a daily basis first out here. Then we'll go give you some profiles on some multiple time frames. How about that? Do you trade light sweet crude, Danny? Do you trade the contract? He's just asking so I know what information to give to you. But if we take a look at the daily chart out here, we've got basically a 100% move of a move that has or is close to taking place. Looks like has is the answer there. And that's a swing point out here from September the 20th. That is the contract. Okay, thank you. And we'll go take a look at multiple time frames for you so that you can go ahead and jot down some market profiles. So you've got 100% move of move. What does Sam Heck, does Steve-O mean by that? Let's go ahead and get rid of this rising price channel since that really is no longer in play out here, and we won't utilize that any longer. What that means is that prices come all the way back down to its most recent swing point, which began on September 20th. Moves from September 20th in that $43 area, moves all the way up into the TAS weekly profile high. That's one of the reasons we pay attention to them. 51.98 was that number. Does that back on October 10th. Tries to take it out one more time on October 19th. Fails to do so. Can't bust them up. What is the expression? Tries to bust them down. Well, now, can it bust through this level? Here's the deal. If you close below 43.77, then the answer is unequivocally yes, it is. And then that would say light sweet crude would be on its way back into the 41.58 level. That happens to be the bullish reversal signal from August the 3rd. So that's what that is saying. When I say that, I'm referring to the daily time frame. If we just go look for some patterns here on the 30-minute chart, see what we have. We really don't have anything other than a 30-minute TD sequential count that formed out here. This is back at about 10 o'clock this morning. So that did form. Price was able to get above that oscillator and change line on a 30-minute basis, but that party lasted for like about 45 minutes. And then, as you can see, price started moving back below it at 12 noon. So this is not looking bullish with regard to light sweet crude out here. Could it be an A to B equals CD to the upside? Yeah, price would have to stop right here, right now, in its tracks, and I don't know that it's really going to do that. Now, but let's go take a look at some market profiles for you. So we'll give you those on multiple time frames, and that way, since you're trading the contract, this will be very pertinent. Now, when I say multiple time frames, I do mean multiple time frames. On this chart here, you're looking at 10-minute, 30-minute, 60-minute, and 120-minute. And what we look for here, you're going to see some type of a change in trend occur on the 10-minute first, then the 30, the 60, the 120. And what you also like to identify, you like to see where we have income in some of those TAS bottoms, TAS tops, so that we can really help us to ascertain where there's a level of support or resistance. Now, the beauty here on a 10-minute chart, Danny, if you were trading this, even to the downside, this is telling us watch the 43.70 level. because that could or should be good support. Why? Because the bottom of that box is closer to the point of control. That point of control being 44.08 on that time frame. That's what needs to be taken out next if, in fact, light sweet crude is going to move to the upside. Now, that's at 43.70. On a 30-minute time frame, Danny, 43.70 is also the bottom of its box. So now you know, we know, the world knows, or the world that's listening in knows that 43.70 is a very important level for light sweet crude. If it busts through that, we know we've got a swing point that it's dealing with, but that would be bad news because as we take a look at the 60 and the 120-minute time frame, prices made it, Kareem, it's not anywhere near one of its profile levels at 44.50-ish or 45.11 to be the numbers out there. So that's what those time frames are saying. If we go ahead and step things up one more time, we take a look at 240, 300 daily and weekly out here. 44.52, pretty big resistance. 44.79 is the number. That's where light sweet crude found resistance today. We can see it was tagged several times. That is the bottom of its box. If I were going to give you a number where light sweet crude would have to close above in order to change its trend to the downside, that number would be clear to me. And now it's clear to you. 44.79 would be it. So 43.70 would be the number to pay attention to. Let's see what light sweet crude does there. It will reveal itself. And all we have to do is wait and see what it decides to do. So thanks for that question. Inside the Tiger's Den, feel free to fire away there as well. Oh, my pleasure. Totally. What's your call, by the way? You can. Did that help you? Is really more so the question. Who, did that information help you? And if it did, then that's a beautiful thing. Okay, so the Dow is up 50 points right now. S&P is up 10. Since I'm not going to the usual suspects unless somebody types them into the screen or sends me an email, we've got a minute here. Let's just take a look at some things moving to the upside or the down. Let's go take a look at Mohawk Industries, MHK, for all of you carpet lovers out there. Now, I think they sell more than carpet. This is probably they had a release of earnings. They did. Earnings per share about $3.62 versus $2.89 from a year ago. That looks good. Looks like earnings are growing. Revenues are growing. All is good. Mohawk is moving to the upside. Good volume behind it. 1.3 million shares out here. Brand new daily profile. Prices run right into resistance out here. So in order for Mohawk to go ahead and get its mojo going, you're going to need to see it close above 192.38. You get above 192.38, it's off to the races. Those races taking to 188.82 and then 207.41. Mohawk Industries, MHK, is the ticker symbol. Dow's up 52. S&P is up 10. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. You know, my eyes didn't see the J on the GDX that Bill was asking about. So let's go ahead and do a bonus round here. He was asking for the levels of support. In this case here, it was the junior gold miners ETF out here. So this one's for you, Billy. You've got support right now. It should come in at about $40.53. I say that or suggest that because that is the top of the daily market profile out here. That's been in effect for about 3 weeks, it looks like, and we're above that. Our price is above that. If it comes back and it holds that area, 40.53, all is well. If it closes below $40.53, then you're looking at 37.85 to 38.74 as being your levels of support. Again, that was ticker symbol there, GDXJ. Next time I'll take a little more time and make sure that I clearly read your email. Lantana wrote in a question. You got to like that name, Lantana. And if we take a look at that, Lantana would like us to look at the IBB, the biotech sector out here. So as we take a look at it, very interesting. Let's go take a look at it, see what it is doing. Now, what we've got here, let's go ahead and draw a couple of lines. Let's go ahead and turn some lines up as well. Those are the market profiles. Those are not going to assist you and I because price is below all of those levels. And let's go see what it is doing and add some additional lines out here, those that are important. How about the swing point from the trading session of June 27th? The old Brexit swing point. That had volume of 3 million shares. That was tested with 3.1 million shares. So his test was slightly more volume than that swing point, Lantana, yesterday. Today is a rejection of that level, but about 1.4 million shares. So it is a rejection on light volume, which, by the way, is actually more bullish than bearish in this case. You like to see a swing point. You see when it gets tested, which it did yesterday, and with more volume, and stayed inside it, it said, okay, the odds are that, hey, maybe you're going to go and test the bottom, the low of that swing point, which, by the way, the low of that swing point is 240.30. At a minimum, what it says, you're going to be back in there testing it, which is, in fact, what it has done today. Do we have a clear reading, though, with regard to the IBB that this is it? Who sings that song? This is it. Is that this is it? It's in my head now. IBB. Somebody will go ahead and type that into the den clearly or somewhere. Oh, we've got Mike in Ormond Beach on the phone. I tell you what. So Lantana, and we'll go to Mike in just a moment here. Lantana. I don't have any other signal. Let me do a quick wave count, even though it's not on the screen here. Now, I do not have any other signal. The red line is 256.01. So if you're looking to be long this, you and Lewis, thank you. 256, we'll call it 257 is the number where you need to see price close above. Let's go to Mike in Ormond Beach. Mike, thanks for calling. Thanks for holding. How are you today?
Pretty good, Steve. I'm looking at an entry point in the Freeport McMoran.
Yep.
And
Okay.
I'm looking at October 24th. There is a gap, and I think the gap is like between 1023 and 1033. I was kind of watching to see if it would get down in there, but what do you think?
Well, let's take a look at what it's actually done. So if we take a look at FCX, like the other metals, they're off the floor right now. In the case of FCX, there is that gap out there, no question. Will it test it? It may. What it's done today is price pulled back, tested that oscillator unchanged line. Now, that happens to be the very bottom of my screen out here. If you're not watching us on TigerTV, that is just slightly right now above the zero line. So that actually starts to get really bullish. When the oscillator unchanged line is below zero and it's rising, says you've got some type of retracement or counter trend move that is underway out here. There is nothing more bullish than a rising oscillator above zero. Now, it depends on where price closes today. That number is 1059. If you close above 1059, pretty good chance that it's going to be above zero. Now, at the same time that it's doing that, it's going to have one of these nice little convergence programs. I'm going to go ahead and put that on the screen for you right now. Even if you can't watch us, those that are going to see where we have a nice little convergence that is coming together. And that is as Tom likes to say, I've stolen it 3 times now, a beautiful thing. Because what price did today is gave you a very bullish signal. You see, when these 3 lines converge out here, Mike, you like to see price come back into that area. And in essence, that is exactly what FCX did today. Came back in that area, tested it, rejected it. You're now above the zero line. As long as price stays above that oscillator and change line, no, I don't think that gap will get tested out there. And if we just simply take a look at price behavior, the last time we saw a nice little cross of those 3 lines out here was way back on the trading session. Oh, I got to close this out here. Give me a moment. On the trading session of August 25th. Which then went ahead and price went lower from there. So just the opposite is in place as we speak right now. So it's not that they can't get tested, but you've just gotten a a nice little bullish signal as we speak right now. Now the key to FCX, Mike. So does that help you out there?
Yeah, yeah. I've been looking at a couple different things about this. I mean, to me, it looks like it may be a big ABC up with the A point starting at the low of 924. And
yeah, absolutely. And then today could have been the C point.
Correct. Yeah.
Yeah. No question about it. The other thing to take a look at, and that's this chart that I've got on my screen. Let me just extend the rising arrow out here. This bodes well, by the way, for FCX. So, you're certainly hunting in the right area. Now, the thing about FCX, anybody that trades it, is you want to be paying attention to what's going on with regard to the Australian dollar. And that is the top portion of my screen. Now, I'm going to see if this is just in a little wedgie pattern. And really, it is out here. So it's not clear and unequivocal, but it is pretty good in that this thing has been making higher lows and higher highs out here. And you want this to continue to move higher because FCX trades really well in correlation to the Australian dollar out here. Now, what we don't have is breaking that little descending tops line, which should occur, if it's going to occur, at least get tested, Mike, within the next several days out here. Could even be Sunday or Monday for all I know. Right now, you have a pretty narrow range bar out here, little doji candle, so maybe it's a little bit tired out here. But the real breakout to confirm any pattern would be if you see the Australian dollar break above this little descending trend line. It's in also a rising trend line, so you've got a little wedge pattern that has formed here. Now, what bodes well for that is that the break of this is going to be a pretty significant one with regard to the next direction with regard to the Australian dollar out there. So that's the other element that I would go ahead and put into your thinking when taking a look at a trade inside of FCX out here.
So,
alrighty?
Yeah, so Steve, at this point, if you wanted to enter, like a small amount, would you go in now with a tight stop, or would you just wait for further evidence of?
Here's what I would do. Here's what we know about FCX at this stage. I wouldn't do it right now. 1122 happens to be its daily profile, and the center of the box is a little bit closer to the top of the box, and so 1122 could be a significant level of resistance, which might give you then what I'd be watching though is I'd be watching that oscillator and change line, and if I were going to fire away right now, I'd say that'd be at about the 1058 level out there.
Okay.
But right now, it needs to clear resistance in order to take a small position, and it's not done that just yet.
Okay. Thank you very much, Steve.
You bet. That was Mike in Ormond Beach, and that was Freeport McMoran, FCX. Steve Rhodes with TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up about 51 points right now, and we've got a request from Sean from Hudson. Now, Hudson, is that in New York? Where's Hudson? Folks, maybe somebody out in the den knows where Hudson is from. I think there is a Hudson, New York. So I'm going to go with New York unless proven otherwise. And he would like to, or she would like to, take a look at, Sean would like to, that's he, I think, would like to take at Whole Foods Market out here. Hudson, Florida. I didn't know there was a Hudson, Florida. I think there's a Hudson, Florida, and a Hudson, New York. There's probably a Hudson in many of the states here. And if we take a look at Whole Foods out here, The question is, in essence, where is this going to? And here's one thing that we know. Well, there's a couple things that we know. Let me go ahead and turn off and on some lines, and then we're going to be able to clearly see what Whole Foods market is doing. Let's turn off this horizontal line. And we can see that it is trapped like a rat inside a trading range. And this trading range here happens to be both the daily and weekly TAS market profile. So let me give you those numbers, Sean. You've got Whole Foods trapped in between 28.04 and 29.52. Right now you're trading at about the 28.77 mark. So it's really right in the middle. Looks like it couldn't bust them down. Now it's going to go try to bust them up. Means it's on its way to 29.52 out here. December 16, 29 calls. So, looks like it's headed on its way back to the 29.52 level. Will it be able to take that out? I don't know. Here's what we do know. If I turn off those market profiles, we can just take a look at normal resistance. And normal resistance on this is 29.47. So you've got a huge supply line that was established because of that gap to the downside. This stock has many gaps, but so the one we're looking at is September the 7th when it moved to the downside was 16.8 million shares out here. Tried to bust it up with 19 million shares. Could not do it on October 6th. Even tried to bust it up yesterday on November 11th with 15 million shares. Could not do it. Strong resistance, 29.47. Of course, if price can close above that, then you have a change in polarity. Old resistance, which it clearly is, resistance ought to become new support. Otherwise, if we take a look at Whole Foods market, there's really not much in it other than bouncing around between 28.04 and 29.52. And so I say thanks to Sean from Hudson, which is only 15 minutes north of Clearwater. Hello. I didn't know that. But thanks for writing in. Much appreciated. So with a minute 50, it looks like to go. I don't see any other emails out here. And if I missed yours, my apology. And be happy to take a look at it on Monday. So what do you do? That's a good question. I don't know that you do anything other than use stops out here. If you're short, you can stay short. And the only reason why I say you can stay short out here as long as you're using a stop is because what you really need to see for shorty to get out of those shorts is you've got to see the VIX index get below 1979 out here. If you see that, then take whatever profits you have left and get the Sam heck out of Dodge, because there's basically your key firewall will have just been blown to smithereens out there. What if you're long? Well, if you're long, I say you stay put. Also with a stop in place. Why? Of course, it depends what you're long. If you're long the Russell 2000 or you're long the ES Mini or, one of their ETFs out here, as long as price today closes above inside the ES as an example, above the 2088 and a quarter mark, you're going to have a bullish reversal signal out here. If you close back below it, then, the Bulls really were only able to advance the ball. Maybe they kicked the field goal, but they didn't get it across the goal line out there. And it says you've just now given the ball back to the Bears out there. So, folks, it is Fantastic Friday. Have a great weekend, an extraordinary weekend. Going to be some great football, both college, both pros, and tonight there's going to be a great concert. Tom Scott, Dave Grusin, Arturo Sandoval. I'm looking forward to it. Have a great Friday, great weekend. We'll see you on Magnificent Monday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.